Hello, this is Paula Tavanger and you're with the weekly blockchain brief. Today we're going to be examining are there any direct risks to the market at the moment. We're going to look at crypto.com, the latest tweet from the CEO, what's happening there. We're going to examine also Maple Finance, and as usual we're going to go through our macro section, then move to the VC deals of the week, and we're going to briefly touch upon the news of the week, actually the launch of the launchpad of SwissBorg. So if those seem like interesting topics for you, please tune in. Since the beginning of the bear market, we're trying to examine any potential future threats to the market stability in this section. And while Crypto.com was one of the entities the community was mostly worried about that it might go down next, they actually came up with a complete audited proof of reserves, which is good news for everybody that is holding funds there. On Friday, Crypto.com published the audited proof of reserves, attesting that customer assets were held on one-on-one basis, meaning that all the deposits are 100% backed by Crypto.com's reserves. The audit was performed by the Mazars Group, the former accountant for the Trump's organization. However, if you look at Twitter, the FUD didn't stop because the investors learned valuable lessons from the FTX collapse and actually started digging into the founder's history. Even the proof of reserves was not enough to stop the rumors about the Crypto.com's CEO. Despite there was no evidence of any wrongdoing at Crypto.com, the CEO Marzelek's business history has some red flags already. Following the collapse of a prior company in 2009, a judge called his testimony unreliable. Also, his business activities before 2016, the year that he founded Crypto.com, involved a multi-million-dollar settlement over claims of defective products, also a corporate bankruptcy, and an e-commerce company that failed shortly after a blowout marketing campaign left sellers unable to access their funds. However, in business always troubles happen, so I believe that these situations are worth examining one by one to understand exactly what happened there, and this of course doesn't mean that there would be any wrongdoing in future just based on that history. Right after that, Marzelek went on Twitter and posted a thread explaining everything that happened with his previous businesses from his own point of view. The aftermath after multiple bankruptcies and FUD is that the customers are actively withdrawing their assets from centralized exchanges. And this is probably based on the fear that there will be further collapses. This led to historically high numbers of BTC withdrawals. According to Financial Times, withdrawals in October were as high as a bit above 75,000 bitcoins. This happened despite many exchanges have rushed to distance themselves from the practices and the chaos around FTX. But the customers, I believe, have little faith left since FTX was also claiming to be perfectly solvent just days prior to ceasing the withdrawals, right? Another reason for the record outflows highlights the investors' wariness of Bitcoin as a digital asset industry because the whole industry is facing scrutiny from global regulators in already this tough environment of a bear market. So here I believe that it will be more of the exchanges that might be suffering or the service providers else than the currencies themselves. Anyhow, we'll be following and see the exact regulators' guidance on that. In the first 7 days of December, 4,545 bitcoins were withdrawn from centralized exchanges, compared with inflows of 3,846 bitcoins in the same period during the last year. Let's move to Maple Finance and what happened there. If you remember, the main reason for the 2008 financial crisis were the asset-backed bonds, which turned out to be not really that backed by assets, and this caused the majority of the crisis. It seems like the crypto industry is going through all the previous mistakes without learning from the history. And the main reason for BlockFi and Celsius going down were the uncollateralized loans to Three Arrows Capital. Normally, if you will borrow liquidity, you're supposed to post a collateral that can be liquidated in case of increased risk. Some companies will lend by over-collateralization, while Maple Finance had a lot of uncollateralized loans or pools that lent without any collateral. How that worked is that in the business model, underwriters of various lending pools would make the decision on whether to grant the loans or no. And those decisions were made simply based on the creditworthiness of the borrower alone. This year's trauma in crypto markets has provided a brutal stress test on how the Maple's business model is working, and they faced the biggest crisis of their 18 months history. In just the past 2 weeks, $36 million of loans have defaulted and another 18 million are distressed. Short debt represents 66% of the total outstanding in Maple's 4 active lending pools, with some of the biggest borrowers acknowledging that they were already devastated by the FTX's collapse, so probably some of those distressed wouldn't be returned either. This also resulted in Maple's native token MPL to drop 50% over the period to an all-time low. Let's go to macro. That will be a big week, the last month of the year and last meeting this year for the Fed policymakers. The long-awaited Fed meeting is finally happening this week on Wednesday. The Feds are highly expected to hike their rates by 0.5 percentage points. But do you think they will surprise us? Previously in the month, we got some discouraging job numbers, and the wholesale price index also was just released, and it was surpassing the expectation. The producer price index is a measure of what companies get for their products in the pipeline, and it increased 0.3% for the month and 7.4% from a year ago, which was the slowest 12 months pace since May 2021. Economists surveyed by Dow Jones had been looking for a 0.2% gain only. Markets now will turn their attention to the more closely watched consumer price index, which is due right on Tuesday, the day before the Fed's meeting. And then on Wednesday, the Federal Reserve should conclude their 2-day meeting with an announcement on where the interest rates are heading. Based on that, I picked up the latest Bloomberg data. They have a section where they summarize all the economists' expectations. And surprisingly, despite the a bit discouraging jobs data, the average estimate is still the same. The economists are expecting a 0.5 percentage points hike in this meeting this week, and they're still seeing the rates going up to 5% sometime mid-next year around May. But I wonder how that would look after the Tuesday CPI data, because that will be also an important factor. So stay tuned for the Tuesday data, because the sentiment might change then. And let's go to the VC section with the best deals that happened last week. We start with Frankie One, which is a Melbourne-based startup that provides an API platform for identity verification and fraud detection. The company announced that it had added $15.4 million in a Series A plus round, which takes their Series A's total to $30 million. And this also will be the largest amount of VC funding raised by an Australian RegTech so far. Exclusively in this market, I think that it makes it even a bigger accomplishment. The funding included a group of returning investors, including lead backers Air3 Ventures and Greycroft, and also some participants like Rain Ventures, which is the venture arm of the financial company Westpac. Also, there were Tidal Ventures, Apex Capital Partners, which were already existing investors, and they added more to this round. And most importantly for the round is that they added new strategic investors, which are Binance Labs and Kraken Ventures. Let's look at the company history. The company is just 3 years old, but they are already connecting banking, fintech, crypto, and gaming companies to hundreds of data sources, and they work with more than 170 financial institutions around the world. The startup also had seen 400% revenue growth over the past 12 months, and its customers include Westpac and Binance, which are also investors, but they also work with big companies like Shopify, Afterpay, ZipMax, and PointsBet. Also, with the previous funding, their team doubled and they opened an office in San Francisco. I want to wrap up this section with a quick discussion of the SwissBorg's launchpad and what is important for us as a company, and especially for us in SwissBorg Ventures, that will be working very closely with the launchpad. So this launchpad, it provides the opportunity of early stage VC investments to the SwissBorg community. And while you probably say, okay, there are so many launchpads out there, why exactly the SwissBorg launchpad? I can say that our technology is built differently and will be providing also access to equity and tokenized assets, as well as it has the capacity for longer vesting, meaning that the community will have access not only to the public rounds, because as you know, launchpads are usually the latest round right before listing on an exchange, so the price discount is very small. With this launchpad, you have the opportunity to invest like a VC very early on, which maximizes the chances for good returns, but obviously is for investors increased risk appetite. You can head out to the link now and explore the launchpad. With our first deal going live in less than 1 day, we're so excited about that. It's going to be a very special deal. It's an open offering to the SwissBorg community of the Series A that SwissBorg is raising. So you can go there and see all the terms and conditions. Again, as I'm saying, this is a very exclusive opportunity. These are rounds that are usually open to institutional investors only. And SwissBorg is built based on the community trust. The company itself launched on a successful IPO. It never got any external funding, so they thought instead of raising Series A, as you see other companies are raising from majorly VCs, we did the same, but also we added this public round because the company always believed that it should be owned by the community. Let me highlight that this is not an investment advice. You should definitely evaluate all the risks related to early stage investment. By the way, I just wrote an article about how to invest as a VC and what are the potential risks that soon should be public. I'm gonna love to share it here with you. But meanwhile, just go and do your own research prior to investing in such early stage deals. There'll be also an AMA going live on this channel that will probably answer most of your questions about the launchpad. Thank you so much for watching. I hope that you enjoyed this episode. Wishing you a great week ahead and see you next week.